Thank you very much, Mr. Chairman. I'm going to follow up on some of the questions of my colleagues. You know, it's an astonishing thing. You've heard this, that this incredible company, Lehman Brothers, was here earlier. It goes back to the Civil War. Bear Stearns, AIG, I guess you started in the 1890s. Hundreds of thousands of people who work there, millions of shareholders. It's all blown up. Absolute catastrophe for the taxpayer. We're not here to talk about that and ask you specific questions about it. You're going to be able to answer those in lawsuits and with the regulators. But you are experienced and you were successful. And a couple of things we were asking is about going forward. Number one, it is your opinion, as I understand it, that credit default swaps, credit default obligations should, in fact, be regulated by the federal government.
Yes.
Number two, should the sellers of credit default swaps be required to have a reserve against the loss? I believe you've indicated yes, and what would that be?
I can't answer the second part yet without knowing what...
Well, we're $180 billion into the bailout, so when do you think you might have an answer for that?
Well, I think it depends on the bailout, and I'd like to come back to the bailout.
Well, the bailout is the bailout.
Yeah,
it's
but let me come back to that in a minute.
In rising.
Because the question is, should that have been the way to bail out?
No, I'm not asking you that. There is a question that the regulators are going to have to ask and answer. And if they agree with you, or we agree with you, that there should be regulation of credit default swaps, one of the questions is, what's a reserve that should be required?
Well, if you put, I can't answer how much reserves yet because there's a lot of other factors that have to go in. But if you reserve yourself out of business, you're not going to have any credit default swap business, obviously.
Well, you've dealt with reserves in insurance, obviously, and done it quite successfully.
Yeah.
So you have some profile of reserves.
Yes, but we didn't do that by just sitting and talking this way. We had actuarial studies, we had a long history, and you'd have to make that kind of study.
So absent actuarial studies, and given recent experience, on the basis of what you know, what you have seen happen, what reserve would you recommend be required in order, if your objective is to protect taxpayers and innocent shareholders, do the job?
I think you have to have different reserves for different companies that have different ratings, number one. I think that would play a role in it. I think you'd have to tell me if
I don't have a lot of time. I understand you can't answer that question. Let me ask you this. There was an immense explosion in leverage, borrowing in order to buy assets. Do you believe that the federal government, as a result of this catastrophe, has to start regulating the amount of leverage that financial companies can use and put at risk not only shareholder value but taxpayer dollars?
Yes, I think the leverage did get out of hand. I think for example, I think that investment banks were leveraging their capital 30 and 40 times what their capital was. I think that got out of hand. But that was approved by the SEC, to my understanding.
Well, there's a lot of blame to go around. And the question I asked, I think you've answered. We have to put a limit on leverage.
Yes.
All right. The next question. If a company is too big to fail, and that's the argument that has been presented by the Fed Treasury, the Treasury Secretary and the Chairman of the Federal Reserve to justify this extraordinary action of taxpayer intervention. If a company is too big to fail, is it too big to exist?
Well, I don't quite follow that. Why is it too big to exist?
Well, the question's really pretty simple. AIG, the fear of AIG failing was that a lot of innocent people would be collateral damage to the collapse. And the federal government did not want innocent people who knew nothing about CDOs or CDSs to go down with the ship.
Yeah, but it depends on how you bail out. I mean, we went through this, and I think if they had used guarantees and didn't use cash, it would have been different. You could have renegotiated with the counterparties. There are many things that should have and could have been done and wasn't. So to make a statement that what was done was the only way, I just happen to disagree with that.
I don't get that part. It should not be the risk of the taxpayers to know all the details of how a company is being run. A company should be run according to rules that limit the risk to the taxpayers. And obviously that wasn't the case here.
Well, I understand that, but when the company went to the government for assistance, I think the way the assistance was offered simply, in my judgment, complicated the problem.
Do you think it is a proclamation of collapse and defeat if a private company with a proud tradition that has made billions of dollars, issued billions of dollars in dividends to its taxpayers, to its shareholders, has to come hat in hand to the United States taxpayer and ask for a bailout?
I think it was terrible.
Well, I would agree with that.
Yeah, the gentleman's time has expired.
Thank you, Mr. Chairman.
Right. Thank you very much.